Hey, how's it going? Today is May 16th, 2022. We're looking at a 2000 tick chart, E-mini S&P 500 futures market, 21 EMA here in blue, 9 EMA in cyan, and 200 EMA here in magenta. We also have a MACD indicator at the bottom. I got a question about this today on Facebook. The settings for this are all default. I'm not trying to complicate things by messing with a lot of settings. I like keeping things as simple as possible. We use technical analysis, price action, overall market context in order to place our trades. Take a second real quick, like the video, subscribe to the channel. We've been getting a lot of traction lately. These videos have been received very well, and I appreciate all of you for watching. So don't forget to turn on those post notifications so you know exactly when these videos drop. Let's get right into it for today. Today was a good day, finished 4-1. I had a loss that stung a little bit. We'll go ahead and talk about that. But as we normally do on this channel, we're drawing our level of resistance here at overnight highs, level of support down here at overnight lows. Probably missing a few markings here, but prices a trend from the highs down to the lows. Couldn't quite reach back up to the highs, and the market opens. I came into the market a little bit late. I came in literally 5-10 minutes late. So I saw this uptrend forming. We had a break, move to a new high. This short-term trend up had played out. Prices tried pushing higher again and then immediately reversed below EMA. We have a new high right here. Prices come down and up for a first entry long, and then prices come down and up for a second entry long if there's a trigger above this bar. When there is that trigger, I put my stop limit order one tick below this entry bar right here. And as prices came down, I was in this trade and I put my stop one tick above the entry bar that I entered on. So prices scared me for just a second before they came back down and flushed me out. I was in and out of this trade. And so that was the first trade of the day. Prices continue working down with the break, move to a new low. So this downtrend is played up. We're looking for reasons to go long. Now we had this low right here. Prices come up and down for a first entry short, and I was looking to take a failed second entry short. I was not looking to take a second entry short at the lows here after this downtrend had played out. So we have this new low, first entry short, second entry short that triggered by one tick, and as soon as prices reversed, I entered one tick above this bar right here. So I viewed this as not only entering on a failed second entry short, but also catching stops. Because everyone that tries going short below this signal bar right here, they're putting their stops one tick above that signal bar. So prices come up, I'm in and out of that trade fairly quickly for a scalp. Prices came back to stop my runner out, but that was a quick and easy scalp. The only reason why I marked it somewhat aggressive was because sometimes around this area, you just don't know what's going to happen. Like when prices come up to the EMA, it's been a little bit wishy-washy lately, but I saw as the MACD was changing its momentum from more of a bearish to more of a bullish, there was a crossover here, and so I felt fairly confident trapping everyone trying to go short into the lows and catch that for the scalp. Now as prices starting to chop along here, notice you start losing momentum to the bullish side here. You have a new high with the first entry long, second entry long. I was seeing this loss of momentum, and so I hesitated. I didn't want to go long here on a second entry long. This is kind of what I was talking about right here. As prices come back to the EMA, you really don't know exactly what's going to happen. Technically that's a second entry long that triggered, but if you don't have this MACD up, you're not going to be able to notice. You are having that loss of momentum. Yes, you do have a short-term trend up with a break, move to a new high, so this uptrend is played out. That should keep you out. But the MACD additionally is showing those hints of, hey, don't go long there. And now we also have this new low with a first entry short, second entry short if there's a trigger below this bar, but it was very clear to see all these overlapping bars, stems going up and down. This is barbed wire area. I didn't take a trade here. I just was not interested. Now, if you decided to take a second entry short here, you place your stop one tick above the signal bar right here, then yeah, you would have stayed in this trade and you would have gotten out for a scalp. But it's just way too aggressive, especially because 9 EMA, 21 EMA are starting to thin out a little bit. Bars are moving in between. Just stay out of that. So now we have this new low. We have a first entry short looking for a second entry short to trigger, and one triggers right here. Second entry short, prices come down to touch the 21 EMA. Nice bullish bar. This was another failed second entry short opportunity. I just saw this as a reversal pattern. I wasn't trying to catch stops. Coming right off the lows here. First entry short, prices push above EMA. Second entry short, prices hold. I enter one tick above this signal bar right here. My stop loss one tick below the signal bar. This was just a standard failed second entry short that I took. Rode that up for a scalp. As prices continued higher, this is where I was starting to look to catch stops. I reset the count as prices come back down to the EMA. First entry short, prices come up, move this arrow a little bit. Second entry short triggered below this bearish bar. Now I marked it as blue. You could argue it's somewhat aggressive because you're trading up above the 200 EMA, but there really wasn't much resistance. As prices were coming up to this 200 EMA, we pushed straight above it. So the swing is right here with the first entry short, second entry short that triggered. I put my stop limit order one tick above this entry bar right here where everyone has their stop losses trying to go short, and prices come up and fill me for a scalp very quickly. Now prices came back and stopped my runner out, so again, no runner there. We have a new high right here with a first entry long, second entry long off the 9 EMA, but I'm not trying to take second entry longs off the 9 EMA. That's not what I use the 9 EMA for. So I'm just sitting on my hands waiting. Prices continue up. We have a break of this short-term trend, work to a new high. This uptrend has played out. So I really wasn't looking for longs at this time. But as we continue to get higher lows and prices are trending above 21 EMA, that's when I started drawing this channel in play here. So we had this break right here, move to a new high. So this channel has played out, looking to see how prices are going to react here at EMA. And you see prices fight a little bit here at the EMA, but then fall through. Now, I actually didn't see it before, but if I back up just a little bit, we have this new low with a first entry short. Prices tick one tick above and reverse second entry short. I didn't take it, but that's a second entry short that you could take. It's somewhat aggressive when you look down at the MACD. MACD isn't oscillating as much as we like it to. Additionally, the second entry short's happening all the way over here. So you have the swing, prices come all the way up for a first entry short, then a second entry short triggering here. You're going down into the lows. It's aggressive. I didn't take it, but as you see, if you enter that, you're out for a scalp. You do have room down to 200 EMA, but yeah, wasn't that fond of that. Price is kind of chopping along here, not looking to trade counter trend. The trend is also not strong enough to be trading a catching stop strategy until prices start pushing low right here. So now prices are starting to trend nice and neatly going down. We have this new high right here. Prices come down and up for a first entry long, and as prices continue down and up, second entry long triggers. Nice bearish bar. Felt very nice about this. I entered right on this bar. MACD is also showing a little bit more bearish pressure. Next bar forms. We're in this trade because prices tick down one. My stop loss is going one tick above this entry bar. And then prices come up, stop me out, and not too much longer later, prices chop down and you would have gotten a scalp. So that was kind of unfortunate. I was feeling fairly confident with the signal bar too. Prices came up and then immediately reversed. You have 21 EMA, 9 EMA, both pushing below 200 EMA. As prices were holding below 21 EMA, the bias really was to go short. So it's an unfortunate loss, but that's just it just happens with any strategy. Now, as we're in this channel here, we have this new low with a first entry short. Prices come up right off the EMA, nice bearish bar, signal bar, second entry short, plenty of room down to the lows. I entered that, got a quick scalp off that, no runner, but we had that short-term trend that was working up with a break, move to a new high, first entry short, second entry short, right off EMA, nice signal bar. Easy trade. Prices continue to move a little bit. We had this new high with a first entry long, looking for a potential second entry long to trigger. Additionally, we also have this new low with a first entry short, second entry short to trigger below this bar. When I started seeing this, I didn't want to trade anything. I just sat on my hands. The signal bar is terrible. You don't want to go long above this bar. Even waiting for this bar to trigger, you're still also looking for a second entry short to trigger. It's just too much. I wasn't interested in taking any trades here. Notice we have a new high here with a first entry long, second entry long right here off EMA, but look at the bars. Bars are overlapping. Stay out of this. You don't want to take these trades. You would have gotten stopped out right there trying to take a second entry long just because the pattern appears. And we're not pattern day traders. We want to trade based off price action, market context, and technical analysis. Here you get a second entry short. If it triggers below this bar, new low, first entry short, prices come up, second entry short, but look at how flat this EMA is. Stay out of this. Even if it gets the scalp this time, that's not a habit you want to develop. Look at how thinned out the MACD is as well. There's plenty of reasons why you need to stay out of all this chop. And this was my last trade for the day. We have this new low, prices come up, first entry short, prices come all the way up, second entry short if there's a trigger below this signal bar right here. It's nice and small. The risk would be fairly small as well. Prices come down. The second entry short has now triggered. So where do I want to catch stops? I want to place my stop order one tick above this entry bar right here. Now I've gotten some questions about this too. Am I going to put my stop limit order one tick above this entry bar? Or because it's so close to the swing high, am I just going to put my stop limit order one tick above the whole swing? And this is really up to you and how you're analyzing the market. I personally, and in this moment in time, I want to get in and out of the trade fairly quickly. If we kind of look back and see what prices had been doing, prices had made lows, tried going back to the tops, to the highs of the day, couldn't quite make it, came back down. You got prices consolidating back and forth, finding a level of support. Now prices are strongly above EMA. 9 EMA is holding well above this 21 EMA as well. So ultimately, it's up to you however you analyze the market. I just put my stop limit order one tick above the signal bar as prices came up. Very nice bullish bar that forms. It opened at the low and closed at the high. For anyone that took this trade, you'll you'll notice it popped really fast. It came up. I didn't get the scalp right away. Prices came down just a little bit and then they came back up again and I was out for the scalp. Unfortunately, the prices came back down, got my runner out, and then prices went exactly where we thought they were going to go. So this was an unfortunate bar to get. Otherwise, I'd still be in this trade, but at least we got the scalp. Now, while I stopped trading, that was my last trade of the day. I did kind of eye out the market a little bit. We had these prices working up in a channel with a slight break, move to a new high. So I consider this uptrend had played out, looking to see how prices are going to react here at EMA. You see prices strongly pushed down below EMA. This 9 EMA is also coming down as well. We have this new high with a first entry long, second entry long if there's a trigger above this bar, and there is. Prices came back up and then immediately reversed and closed down below EMA. I wasn't necessarily paying attention at the time, but I think if I was, I would have loved to take this trade. We also have this new low here with a first entry short, second entry short. So you've trapped people trying to go long, and now you enter one tick below this signal bar here, and prices come down and you would have been out for a scalp before prices continue down. Additionally, MACD is showing bearish momentum. You have that 9 EMA crossing over the 21 EMA, but I still marked it somewhat aggressive because when prices get to the EMA and they start chopping around like this, it's just it can be a hit or miss sometimes. But the reason I have this break and new low note here is because I did want to talk about this. It's very important that we draw our channels correctly. Our trend lines need to make sense. Why do I say this? Because we want to draw the trend right off that first swing, and we do. We have a break here. We have prices moving to a new low. So prices move to a new low. This downtrend has played out. We're looking to see how prices are going to react back at the EMA. Now, why am I saying this? Because if you extend this channel just a little bit, notice how prices are holding within this channel. You draw it off this swing instead of this swing. If you have your channel drawn like that, notice what's going to happen if you're trying to catch stops. You're going to have a new swing here based off of the EMA with a first entry long. Prices are going to come down. Second entry long triggers above this bar and immediately reverses. If you enter one tick below this entry bar trying to catch stops and go short, you're going to get stopped out because you didn't draw the trend line correctly. You want to draw it off the swing. Trend line breaks, prices move to a new low. So you should not be shorting here below this bar. The break and new low already happened. Additionally, you'd be shorting directly into the 200 EMA. But I did want to talk about that so that we can train our eyes and understand why it's important we draw those trend lines the best we can. So other than that, those are the trades that I saw today. Again, the goal is to just trade the first 2 hours of the day, 8:30 to 10:30. So if you were done trading about this time of day, you got 1, 2, 3, 4, 5, 6 potential wins with 1 potential loss, if you manage to stay focused for those first 2 hours. But I want to keep these videos short. I don't want them to get too long. We'll see what prices continue to do, continue to try and work their way up to these overnight highs. That's it for the bar by bar analysis for today. I hope that you guys enjoyed this video. I hope that you guys had a great trading day, and I'll see you tomorrow.